All right, so let's see if we can get a recap done inside of whatever time I have here, 43 minutes. For fuck's sakes, man. All right, so we're trying again here on this recap. Day number 13 is in the books. It is a small winner with 1.29% in net ROE and $31.93 in profit. Now, my accuracy was 2 out of 3 trades, which is okay. My loser was a bit annoying. I should have probably done better on that one. We'll get to that in a minute. But overall, I'm pretty happy. I took 2 trades pre-market, and I said no to everything in between 9:30 and 10:30, basically. And there were probably close to 100 moments of me wanting to get into a scalp situation, me wanting to take a thin trade, and I did not. And I think that's a good show of discipline, and so I'm pretty happy with my result today. So here's a look at my trade log with the 3 trades from today highlighted there at the bottom. I traded 3 names, none of which I was familiar with, and only one of which had news. And the one that had news happened to be my loser, which is kind of a theme today, as you'll see shortly. So my 2 winners had quite a bit in common. The share size was the same. The hold time was both under 1 minute. They were both 1 entry, 1 exit. Very quick scalps and pretty good results. And I think that my profit loss ratios were pretty good on both. Now, another thing that both of these trades had in common is that they both ripped up way higher than my exit. And I don't really feel bad about that. I think in both cases, I was pretty right to be taking the profit as quickly as I did, especially with this trade, which was a 3-second hold capturing, almost 40 cents. And I can't complain about that. I mean, we're talking, 13 cents per second. That's definitely acceptable. So I'll open up the charts here and we'll take a look at what happened. First one was AREC, which is turned out to be a big winner at the time that I found it. Right, so this is the only 1 minute play that I took all day, and it was my very first trade. So if we zoom in a little bit, you can see a bunch of sideways consolidation. I saw this around here when I got to my desk, and I was doing something else at the time that it broke that 650 level, which is a shame because that was a great setup. Risking $6, break of 650, that could have been the start of a home run. Instead, I got in like not exactly no man's land. I do think the risk setup here was extremely tight and very good at only 20 cents. And I took my entry on this candle here as we broke the top of the pre-market high. And on the very next candle was my exit. My target on this the whole time was 750. I wasn't getting greedy. I just wanted to make a little bit of a profit cushion because what I was seeing on the scans in the morning was that it was probably going to be a high action day, which means it's probably going to be a dangerous day with a lot of risky things going on. And so I really wanted to just book a little bit upfront pre-market in order to give myself the emotional safety or safety net, I guess you could say, to be able to take bigger risks later on if I so decided. Now, my next trade was on JG, which is one of the only things to have news today. And you can see that I missed the real rip down here starting at 845 that, squeezed up all the way to 1150, pulled back, and then formed a 3-bar play that I did not jump on. I looked at this and I thought, damn, I got to risk like 75 cents on this in order to get involved. I didn't really feel like doing it at that time. It was pre-market. I still had some things to do. And I felt like it would have been not very disciplined to get in. And so that feeling, in my opinion, is what makes my actual trade on this technically probably a mistake. So you can see after the break of 1150, it squeezed up to 1287, and I thought, okay, well that's kind of good because I would not have got the profit that would have justified getting in on this 5-minute setup. So I thought, okay, let's wait to see if this pulls back a little bit more because I mean we ripped up from $9 to almost 13, and there hasn't really been a substantial pullback. So I decided let's wait to see what the reaction looks like, if there's a bounce point or anything like that. And what I found, as you can see by the line that I have drawn here, is a to the penny bounce off 1150 right here. And this is a bottoming tail candle that ended up closing green. And I think like it was only the last 20 seconds of this candle. It was at the time like down at 1180 or so. And in the last 20 seconds of the candle, it started ripping up. And the thing that prevented me from taking a preemptive entry was the volume situation down on the 5-minute chart that was still descending. And so I didn't really like that. I wanted to wait for probably another candle. I didn't want to use this one as my trigger because it was completely inside the long body before it. And I'd rather not use an inside candle for my trigger. So I waited for the next one. The next one did break that level by only 1 penny. And I anticipated that a little bit. You can see my entry there, wherever it is, it was at 1220 I'll back up the 1 minute so you can see. Right, so this is what it looked like on the 1 minute. The bounce off 1150s right there. I thought that looked really strong, and I did get in a little bit early on this. And what I realized immediately upon buying is that, god damn it, I just bought right into a hidden seller. I almost stopped out immediately, like 3 seconds later. The price was dropping. I thought, god damn it, let's at least give it a minute. I'm gonna see how this goes. And then it ended up curling. It started to curl here, and you can see there's a pretty substantial volume spike of almost 300,000 shares going through my entry up to 230. And then there was just, it hit a brick wall at 30 and came back down. And at 12:30, once we crossed back above my entry, I did think maybe I should get out of this. There isn't really enough pullback for me to justify getting in here. And I started having a lot of second thoughts. And you could see the big, drop coming off 12:30. I thought about moving my stop up to 12, and I just couldn't come up with the plan fast enough. The break of 12 happened pretty quickly. And so I thought, okay, I'm just going to stick to my guns on this one and wait for 1150. And it bounced once off 1150, started coming back up, and then failed again. And then on the next candle is when I got out. And I did exit exactly at 1150. However, unlike yesterday and a couple of other days when I was complaining about early exits, this was not a mistake. This was intentional. There was also a buyer at 1155, which broke at that time. And I thought if that seller breaks, 50 is going to break as well, unless there's some kind of massive hidden buyer, which I didn't expect to be the case. And I was expecting a pretty quick wash if 1150 did break, so I didn't want to get slippage given that I already butchered the trade. And so I decided to just run the risk of having this come back up and just stop out exactly at 1150. Now, looking back on this trade now, there's a number of things that I don't like about it automatically. And this is something that I thought about at the time as well, and that I think that I was right about looking back, after the fact. And the first thing wrong with it is the time of day. I took this entry at 9:15, which is only 15 minutes away from the bell. And it really messed with the way that I was able to manage this trade. I was afraid of the bell big time. I did not want to hold this into the bell. I really wanted to ditch it, get quick resolution, maybe hold for like 3 or 4 minutes. And you can see that my 3 or 4 minute hold turned into 7 minutes or so. And, there was a lot of, look at this war here at coming up to 12. So this was hitting 12, having a lot of trouble, and then the ask would refresh and put more orders at 12. And I think that even though that could have been viewed as like a pressure building spot, I think the volume really told me that there's not a lot of interest in breaking 12 here. And then when we finally did do it and got up to 12:30, it reversed immediately. And I think I lost more than I should have in multiple ways. I could have stopped out around 12:30 just above my entry, basically a break-even trade, which in my mind at the time was like, let's just cancel this trade. I don't like this idea anymore. And that would have been fine. I would have been okay with that. Granted, it could have ripped up to $14 and I would have regretted it. So I really have to be careful not to, overstress the result and really pay attention to the setup. And like I said, the time of day that I got in this was a problem. I was really afraid that at the bell, some craziness would happen and it would end up retracing down to $9 or something. And if I fast forward the chart, you'll see it did a lot worse than $9. So this has basically just been fading nonstop since that 12:30 tap right there. That's where this is the candle I exited on, and it never recovered. It's just completely dead. And not to overstress this or anything, but I think another really important problem here is that I was unwilling to take this flag right here. I was unwilling to get involved with that. You can see it on the 1 minute right here too. I was unwilling to take that mainly because I would have had to risk 75 cents in order to take it. And here we look at this other spot where, guess what? I lost 70 cents. So clearly I was risking the same amount. And do I think the profit potential was stronger coming off this long body compared to these two? No, it clearly wasn't. I think the profit potential was definitely lower, and I could have seen that at the time. I mean, yes, there's always the outside chance that we could rip into some kind of short squeeze or whatever, but expecting that kind of thing is ridiculous. And so I think that if I was going to trade this stock and take that amount of risk, then the right place to do it was coming off above 1150, risking 1080. Now, something that's really important about this day is how many big winners I did not touch. And this is a good example right here. This is, I think, the big winner right now still. I kind of ignored it pre-market because I thought this kind of portion right here was pretty weak, and if it was going to be strong at the bell, it should have been strong before the bell as well, and the volume was just a joke on it. And the only spot that I really thought about getting in was when I saw this pop up to 50 and then the pullback, and then I saw we were on pace for good volume, and I thought maybe I should get in above 450, but I couldn't come up with a risk idea that made sense fast enough, and I ended up missing it. I thought about that again at 520 here, and once again I missed a move. I couldn't think about it fast enough. I couldn't come up with a plan. Now, even though we can see, this went up all the way to $14, I think the last point where I would have been okay with trading it was actually right here on this candle at 954, because the price action on this was disgusting. I was so unimpressed with the price action here that I'm glad I didn't get in. I mean, yes, there was this spot, but again, this is a huge risk proposition. I would have had to expect almost $2.50 of a move in order to get involved there. And I think that's unreasonable to do. And another thing that I noticed throughout the day on a bunch of stocks, pretty much everything, and this is something that I've been wanting to talk about for a long time that I haven't, is the patterns that I'm noticing with halted stocks. There is something wrong with halts right now. I don't know what it is, but I'm a guy who's been in love with halts for about 3.5 years now. And they're the main thing that I look for. I look for that kind of volatility. I look for that gap in between the halts. When you get halted going up and then it resumes higher, squeezes up, gets halted again, resumes higher. That is not happening right now. The only spots, honestly, that I've seen a real legitimate halt gap in the last several months, to be honest, is on really, really, really low volume stocks. Like a couple 100,000 share getting halted or whatever. And on these big runners, on these, the hot stock of the day, too many times we're getting flat opens. We're opening below. It's halting up on crazy momentum, and then it opens lower and flashes down like, a full dollar or something. Now, there was about a 4-hour gap in between that last recording bit and what I'm saying now, so I'm kind of not in the zone that I was in earlier. I got interrupted there, had some business to take care of. But I do remember that this is going to be relevant for the way that I traded BSQR, which was my last trade, the quickest trade of the day. And this is one where I really got caught off guard. I must say that I was, at least to some extent, ill-prepared because I was not very aware of where the halt levels were. I was planning to take a long above 450 and risk very, very, very tight, possibly even immediately risking my exact entry, which is a decision that is going to take too long to explain. But the point is that as soon as I got in this, and I really nailed the entry, by the way, the timing was flawless, and it squeezed up immediately to 487, and it was squeezing into a halt. And that's why I was like, oh my God, what the hell? I didn't realize the halt level was so quickly. I don't want to hold through a halt. And so I ditched it immediately at 487. You can see I actually top ticked it exactly to the penny. And the reason was because that 487 level is exactly where it was pre-halting. And I had no intention of holding through a halt. My plan on this was different. And so I got thrown off by this. And my reaction to the situation was to just take the halt level sell and get out right then and there. And looking back, I'm perfectly okay with that. I mean, granted, it wasn't the big winner that I was really hoping to capture. But given that I did get caught off guard in this situation, I'm perfectly okay with my decision to sell. Especially given the fact that, I managed to capture 40 cents in the first 3 seconds of my trade. So I can't really be upset at the result, even though, yes, just like AREC, this one did continue and it was clean all the way up to 652. But that's why I was talking about halts, because the first halt attempt was down here at 487, and then it just false halted the whole way up to 652. It would keep reaching the level, it would pre-halt, it would break out of the halt, come back down, and then try again. And even though this is, it equals good price action, and it's action I could have dealt with, because it caught me off guard, and I did think that it was actually going to halt at 487, I'm okay with the exit. And the reason that I was okay with the exit, the reason I didn't want to hold through the halts, like I just said, is because the resumptions are garbage. Like, I don't know what's going on here. I'm pretty sure that there is a massive change in the way that halts are being regulated. There must have been something that has changed since late last year. And I haven't looked into it yet. That's going to be a mission for for whenever I eventually get free time in this goddamn couple weeks here. But the point is, this thing halted at 652 following great volume. I mean, look at this ramp up. We're talking about, a $2 move in a matter of 6 minutes, and you got a halt out of it. And then the resumption was lower. I was watching this halt the whole time, and I saw selling pressure develop immediately, and we were heading in toward a gap down situation. Well, first of all, the halt level was 652, and the resumption price was technically 640, but I wish I had video of this because it was an instant wash down to 550. If you had bought in, just going into the halt like I used to do and will no longer be doing now, if you had done that, you would have got smoked potentially. I mean, you could have lost $1 per share on the first second of resumption. This was not a case where it opened at 640, hovered around 640, and then gradually went down and then became a bottoming tail. This was an instant flush from 640 all the way down to 550. And this is exactly the kind of disgusting action that I saw in a lot of stocks today. And it's what turned me off taking the higher risks, taking some of these plays on like AAME, which since I started recording this recap has not done too well. That's obviously predictable, but like throughout this section here, there was a bunch of almost halts, and the resumptions when they did actually halt, when these stocks did halt, were terrible across the board. It was just the most consistent thing ever. And so basically all this, what I'm trying to say here is that my outlook has changed big time, especially over the last couple of weeks since I launched this account and have been, a lot more focused day to day. I've been looking at this stuff and I'm seeing like, well, I don't really want to hold through halts anymore. Everything I'm seeing is negative. What's the motivation to me to get into a halt? Before, it was because you could capture, 30 or 40 cents in an instant, even though you had to wait 5 minutes for it to resume. Typically, something that halted up would resume much higher. And that was the main reason that I would chase halts, is because when you get the really good average going in, you can pretty much be guaranteed almost, 85, 90% of the time, there would be a significant gap and you could just be instantly profitable coming out of that halt. And then there's still the potential that it would go up and squeeze higher. So anyway, that'll conclude the halt rant for now. I do probably want to make, well, assuming I have the time, I would like to actually talk about this subject because I'm somebody who has been talking about halts, encouraging people to understand halts, and just focusing altogether on the value that is inherent in halted stocks, whether it's on the front side of the halt or the back side. Doesn't really matter. I've always been somebody who's hunting for them, and I recommend to people to try to learn because the value in learning is great. And right now it isn't. Things have changed and they haven't changed for the better. And I gotta say, it's made me nervous a little bit in the past, but it's been especially apparent ever since this short squeeze mania started on what was, I guess, day number 7 or something like that, day number 8 for me. I'm really not happy with it. I noticed it a little bit last year, and I started to think, like, where's all the gaps in the halts? And they just weren't there. I just said I wasn't going to talk about it, but anyway, here we go. So long story short, this week was a bumpy one, no doubt. This big red day really pissed me off. This is still something I'm focusing on, even though, I had a couple of decent rebound days, got most of it back. I guess I didn't update this over here, but I'll be opening close to 2,500 on Monday. That's okay. I'm not super happy with the progress still. There's a lot of inconsistency here. If I open up my trade log, you'll see my accuracy following that other day right here is garbage. Back down to 53. Not really that I care much about accuracy. It's the daily results that I really focus on. But at the same time, I'm pretty happy with the fact that my terrible red day this week was at least sandwiched between decent days where I performed okay. I can at least be satisfied with it. It's about where I would consider a medium performance for me under normal circumstances. Now, these past couple weeks have been not normal circumstances, and I've managed to do okay with them. So I'm looking forward to being able to, get back into shape. And something I did today that I think was really good was I avoided all the 1-minute plays. I know there was that exception pre-market there on whatever it was, the first trade I took today. There was that exception where I was playing a 1-minute setup, but other than that, I stuck to the 5-minute chart and I said no to everything else that didn't fit exactly what I wanted. And as a result of that, I came out with a decent day. Even though I did, make a couple mistakes on that red trade, I am satisfied with it, and I'm going into the weekend a lot happier than I would be if I had booked red days coming off of that terrible loss there on day number 11. So in any case, that's going to be a wrap for me. I'm going to close this video by stating that I do intend to make some changes to my hotkey setup this weekend, which is part of the reason why I've been delaying the hotkey video of my hotkey setup. I am going to be making some pretty important changes to that, and so I'm going to hopefully find the time this weekend to be able to make that video. If not, I'll be active first thing Monday morning, and I'm really hoping to get a first time in this account green streak of 3 days. Apparently, that's where the bar is at right now. So have a good weekend, guys. I hope everything went well for you this week, and see you next time.